Hi, everyone. My name is Dustin Miles with Momentum Multifamily. I'm excited to have Flint Jamison here today. Flint, good to see you again, and hope you're doing well and hope summer's going well. If you could introduce yourself, and we'll take it from there.
Yeah. Summer just kicked off. The kids just got out of school last week.
Oh, wow. Cool.
Um,
Okay.
yeah, things are great. So
That's awesome.
lots of trips planned this summer, hopefully.
Oh, cool. Okay. Got it. And where are you located, Flint?
Right now I'm in Northern Virginia. I don't like saying
Cool.
that because we're from Colorado. So it's a
Oh,
temporary
okay.
thing. We're out here and hope to move
Okay.
back soon.
Okay. So you would potentially move back to Colorado or?
Back to Colorado, yeah. I
Okay.
mean, we grew up there, all of our family's there, and
Oh, wow.
plus there's mountains. Skiing sucks in Northern Virginia.
Yeah, yeah,
Being blunt.
yeah. Where in Colorado would you guys?
We're
Denver
in the
or?
Denver area.
Okay,
Yeah.
gotcha. Cool. Okay, awesome. Well, I'd love to hear your background. Just I know we kind of hop into it a little bit, but you went to school for engineering, and so would love
Yeah.
to just kind of hear about your background, and then maybe how you got into real estate and kind of the alternative investment space.
Yeah. So yes, mechanical engineer. I ended up in aerospace for most of my career.
Okay.
So it's easier for me to say aerospace engineer because
Yeah,
I mean
yeah.
I did aerospace for 20 years, designed aircraft, the Boeing 787 back there behind me, and I've got some other things.
Oh wow, that's super cool.
Yeah, that's why I have airplanes behind me. I have a couple patents on the wall, which is fun. But
Wow.
yeah, long story short, I did a bunch of things beyond Boeing and then started investing in real estate. I bought a duplex in 2018 and
Hmm.
decided that was going to be a very long path to what I was hoping to achieve. And so I decided I found syndications and figured I could scale up much quicker that way.
Awesome. How did you? Just curious. How did you find out about it? Podcast or
Yeah,
conferences or
yeah.
meetups or?
Actually, it's funny. I think I have to attribute everything to podcasts. Way back in
Okay.
2017, I was listening to Bigger Pockets, and that kind of got me into the Burr strategy about a
Yeah.
duplex. And then likewise, I think Bigger Pockets ended up. There was some interview about syndications, and then I drank the Kool Aid from there and started educating myself, finding partners, and networking.
Yeah. Gotcha. Okay. Cool. And did you, as far as I guess learning, get kind of getting more in depth, did you end up joining a group? Did you just kind of,
Yeah.
did you learn on your
Well,
own or?
I pseudo joined a group.
Okay.
I was unwilling to pay $30,000 mentorships, uh, especially when I started hearing that most of the people who did pay for it, there was about a 10% success rate.
Oh, wow. Okay.
So I was like, all right, well, let
Yeah.
me go in on the cheap. And I think I spent about 1,200 bucks for the series of videos that the mentees, or that all the people who spent $30,000, they got the videos and they had to watch the videos. So I spent 1,200 bucks and watched the videos myself. Went to the conferences, started finding partnerships, and um, yeah, it's like I saved myself a boatload of money there.
Yeah. Wow. Okay.
But
Uh,
let me just to clarify, I guess, a bit further. I have paid for coaching throughout. I've paid for when I realized I sucked at capital raising. I paid for coaching to capital raise.
hmm.
Subsequently, I paid. Actually, I had a mindset coach at one point. I had
Oh, cool.
a sales coach. So I've had multiple coaches, but the key here
Oh,
is
wow.
I like to tell people who are really wanting to go into syndication, they want to try to find the best guru to throw $30,000 at or $50,000 at. I'm like, no, no, no. Those guys teach you everything, like the top level 101. But at some
Yeah.
point, you're going to have your niche, and you're going to have to go pay another coach to get good at that one niche. If you want to be that asset manager, go spend the money on the asset management training. And so that's kind of where I serendipitously I found that that's what I was doing, and that was the best path, best bang for the buck.
Okay. Got it. Cool. Any things, I guess at your different kind of coaching stops and all that, any kind of takeaways from any of those that you want to share?
Oh my gosh. Um, there's something for all of them. And what's funny is, so I lessons learned. The world changes fast.
Sure.
So the things
Yeah.
I got on the capital raising program, um, I am no longer using. Like, and that
Mm.
was maybe 3 years ago. So I paid a
Oh
bunch of
wow.
money to get this thing, and then now I've moved on to others. So you grow very quickly. So understand that,
Mm.
and technology and AI now, things are moving
Right.
lightning fast. So
Yeah.
it does help to have a coach. Get in with that coach. Just know that you the things that you've learned could change really fast. And I'll give you one
Right.
example. LinkedIn back in 2021, 2022, super easy.
Mm-hmm.
Just organically post. People are coming at me, impressions galore. It was
Wow.
easy. Now it's not. LinkedIn is
Yeah.
it's a grind. It's not as
Yeah.
easy anymore. So
Yeah.
yeah, once again, I paid for some LinkedIn support back then. I was a small coach, but yeah, there you go.
There's to your point, I feel like there's a lot of LinkedIn coaches now.
Oh yeah,
And to your point, even just a few years ago, I don't that wasn't really a thing, or if it
yeah,
was very there was like one guy or two people or
yeah,
whatever. Now there's I don't know, it's a lot. So yeah, but awesome.
yep.
Um, and so you started out kind of doing the Burr thing, and then when did you invest passively into a deal? Did
I
you?
did.
Okay.
Yeah, the I invested into two deals passively before I went active.
Okay.
Um, it was
Gotcha.
about a year. I was only passive for about a year before I knew I
Okay.
was going active, but actually
Right.
I had a solo 401k, or I had a 401k that I created a solo out of, and that's what I invested my first
Okay.
in the first two LP deals. And
Gotcha.
so I kind of got to see that we were cash flowing in the this was actually during COVID 2020 out of all
Okay.
things.
Oh wow.
So yeah.
Nice. Okay. And and then when did you kind of start, I don't know if you've done more of the GP route or fund to fund route. It seems like the industry's
Mm,
kind of going in the fund to fund route, but
yep, yep,
so anyways, have you done both those
yep,
or one of those or okay.
yeah. So a fun story. My first deal, my first deal was a flop. I partnered up with some guys and we were going for a small 20 unit, bite-sized piece.
Yep.
We
Yep.
ended up backing out of that. We couldn't raise enough capital. There was a whole lot of other drama around that. So we dropped it. I'm glad we did.
Mm.
Um, where I that's where I turned around and got my coaching program. How do I raise capital better? And then I
Okay.
got invited onto a deal at least 3 or 4 months later with some people
Oh
I met
cool.
at a conference. And then, yeah, co-sponsored there. I'm still doing the asset management gig with them. I'm like the part-time asset manager playing my role.
Oh okay.
Um,
Cool.
and then my second raise was a fund to fund.
Hmm.
I was working
Okay.
with my coaches, and I actually jumped in with my coaches at that point because they were doing a $30 million raise, a three property portfolio. They're like, hey, Flint, if you can do a fund to fund and raise $1 million under us if you want, you can bring in some friends. So I got some other capital raising partners because I wasn't capable of doing $1 million. So
Yeah. Yeah.
brought in some other friends in the course, and yeah, it's wild. I did my second raise was fund to fund, and this was back in 2022.
Oh wow. Okay.
So
Got it. Okay.
yeah.
Cool. And how was that process kind of raising capital for you for the first time?
Uh, it's brutal.
Yeah,
It's brutal. I think I would say 99% of people say the same thing. It's not easy.
sure.
It's a grind.
Yeah,
I only know a couple people that are like, yeah, I raised $1 million in 10 days on my first try. Like, yeah,
right,
you're
right.
connected. You
Yeah. Well, it was also, I don't know when in 22 you guys were buying that deal or deals and all that, but that was also, if it was kind of later in the year, that was when interest rates were
interest
were
rate
going
spiked.
up
Yep.
big time. And so, just from a passive investor perspective, it's like, Oh, interest rates went from 3 to
Yeah,
you know,
yeah,
6 or 7 or whatever, very, very quickly, kind of all in.
yeah. Yep.
And so that, that had to have been, that certainly didn't help you.
Yes.
So,
Yeah. And it's since then it's been a struggle. Granted, I've been able to raise more.
hmm.
Where I find investors are now more excited is when I start bringing in all these new asset classes.
Oh,
Um,
interesting. Okay.
like I did build to rent developments. I've got 3 deals on build to rent.
Oh, wow. Okay.
I've got the medical portfolio.
Hmm.
It's by dentist offices, and we're going to buy 10 of them, and
Oh,
then we'll
wow.
hold them in cash flow for a few years, and then sell off to a healthcare REIT. And then the last one, I don't like advertising this much because I don't plan on doing it anymore. But I had a like a once in a lifetime opportunity to invest in a startup who's basically a billionaire going round two. So
Oh, wow.
chances of unicorn is quite high, and the business model is very understandable. It's not like this wild
Right. Pie
new
in the
like
sky.
when Uber
Yeah.
first shows its face, and you're like, "What? You're gonna get in a
Who's going
car
to
with a
ride
stranger?"
with a stranger, you know?
Right. Yeah, yeah. So this one, I mean, this one's like, oh yeah, we absolutely
Yeah.
need that. And so it's like this
Yeah.
billionaire is brilliant, filling a hole in the
Mhm.
market.
Yeah.
So I invested in that, and then a year later, they said, "Hey, Flint, do you want to raise money and bring your investors in?" And I said, "Sure, I'll give it a
Okay.
try." I mean, I'm all in on it, and sure enough,
Yeah.
investors really showed up for it. So
That's
it's
great.
yeah, you never know.
Yeah. Yeah. Yeah, I think, I think some of it's just um shiny object syndrome a little bit, maybe. I
Yeah,
don't know.
yeah,
Like, hey, that's new. Or, for me personally, like I mean, I'm heavily invested in multifamily, but I also invest in, other stuff too, just to diversify a little bit. Oil and gas and some other
yeah,
stuff. And so, but if it's someone's like, hey, you want to invest in my multifamily deal, because I, it's know a lot in, been doing it for a decade plus,
yeah,
and so my bar is very, extremely high because it's like, it's got to be super smoking deal, or I'm just gonna invest in my own deals. So,
yeah, yeah.
but yeah, I do, do oil and gas. I've done some other, Bitcoin mining, some other stuff too, but
Yep.
and just some different, businesses. But um, and when I guess when you talk to investors, are you kind of, you're, I don't know if you're still an engineer now, but you were an engineer
Yeah,
for a.
it's Yep, I stepped out, but I did engineering for, well, I transitioned into leadership and program management. So really, the last
Oh,
5 years
okay.
of my career, I was managing the engineers, and we're doing Air Force aircraft modifications. So
Oh, cool. Okay.
yeah,
Got it. Is do you are you kind of attracting more of are you attracting just kind of a broad spectrum of investors, or is it a lot of engineers just
um,
because they like,
if-
hey, engineer, I relate.
yeah, yeah. So from my marketing perspective, I definitely dial in on engineers and tech professionals. Right, we kind of speak the same language, if you will.
Yeah. Yeah.
But yeah, some of my investors are absolutely like, there's a guy who owns a roofing franchise. So
Oh, cool. Good for him.
yeah,
Yeah.
yeah.
That's
So they're kind
great.
of all over the map. But I think people like uh, an engineer who's transitioned just because I don't know, they find comfort in the fact that I do the numbers, and I do a lot of numbers,
Right. Yeah, and you're
do them well.
comfortable with that. Yeah.
Yeah.
So that's great. Um And so you went to and I was just going to back up just a little bit. So you grew up in Colorado, and then
Yep.
did you go to school, college in
Yeah.
Colorado too? Okay.
Yeah. I went to school up in Colorado State University up in Fort Collins.
Oh, cool. Okay.
Yeah.
The Rams?
The Rams, yeah.
Rams? Okay.
Yeah.
Cool.
I
Okay.
guess people from, if you're not from Colorado, I guess a lot of people don't know that, but It's a big
Yeah,
school. I mean, not
yeah,
quite as big as CU, but still pretty sizable.
yeah, yeah. I've been to. I live in Texas, but I've been to Fort Collins, and I think I've been on Colorado State campus maybe once or twice. But
Oh,
so anyways,
wow.
but
Yeah, it's a great town.
yeah, yeah. It was super cute. Yeah. Um, and then so I guess kind of fast forward to 2025 and all that. Are you so you've kind of gotten a little more traction with some of the other asset classes and all that. Is are folks looking more for cash flow? Are they looking for the
Yeah.
depreciation? Like what's
Um,
appetite right now?
I've stopped with development because I'm seeking cash flow.
Yeah.
Um,
Yeah.
I wouldn't say depreciation comes up a whole lot, although I just got
Mhm.
an email from a guy this weekend who's questioning the how does depreciation work.
Okay.
But I'd say in large part, the majority of my investors, I mean, the reality behind depreciation is it doesn't work unless you have a larger portfolio where you can really take advantage of it. Because if
Right.
you're still
Yeah.
working a W-2 job, yeah, you get it. So I try
Yeah.
to be grounded when it comes to people first investing. Like, yeah, you'll if you get cash flow, it won't be taxed, but it's not gonna make you rich. It's when
Right.
you build up your portfolio and that snowball grows big enough to the point where you've got so much passive income and everything, and selling off one property, buying another. That's where the magic happens. So
Right. Yeah. Gotcha. Okay. And I guess as far as, not to give all secrets away or whatever, but what's kind of working for you on, because I think you're kind of actively raising, I think for
yep.
some other asset classes and all that. So what's kind of working for you right now?
uh, to be honest, right now I feel like I'm back in the wild, wild west
Oh,
because
okay.
LinkedIn has become, it continues to get more and more challenging. It continues to become more noisy, especially as
Yeah.
people just turn on the AI engines and flood it with
Yeah. Just
noise.
blast. Yeah. Blast people.
Yeah.
Yeah.
Um, Referrals are working, but I'll tell you, so I'm making a new play called the Wild. This is my Wild Wild West. I decided to write a book.
Oh,
It's the
cool.
Engineer's Guide to Real Estate.
Yeah,
Um,
that's cool.
so I would put it as the actually I'll plug his book too because I've always told people The Hands Off Investor by Brian Burke.
Oh yeah, yeah, yeah.
It's a hefty read. It's
Yeah.
like
Okay.
350 pages. It's very detailed, and to be honest, it's as good as it is. It's almost written more for people who are looking to become syndicators. It's very detailed. And
Oh,
I
okay.
was like, you know
Gotcha.
what? Engineers are smart.
Mm,
They can like the details, but most people, even tech professionals, they just don't have the time and they don't want to digest something this big.
right,
So I was
right.
like, you know what, I'm going to cut through the chase and write a book that's half the length and it's written by an engineer for engineers. So there's some engineering analogies and
That's
I
cool.
tried to put humor in there. So
Yeah, yeah. Nice. Okay. Awesome. That's cool.
yeah,
Um, and I guess in terms of just kind of keeping in touch with, do you have kind of a certain rhythm with your investors and all that, or just how are you? Are you more posting on LinkedIn? That's how you kind of stay top of mind.
yeah.
What's
It's largely LinkedIn that I stay top of mind. I do newsletters, but I don't.
Mhm.
I'm not a monthly newsletter guy, or definitely not weekly.
Okay.
I will send an email if I have something to say. I don't send an email just to send an email. Um, I get why people do it. Like the weekly emails, they're staying top of mind, but they largely get deleted.
Right. Yeah.
So
Yeah.
I try to be, I don't know, I'm trying a different path. Plus, newsletters, for me being an engineer, this is the challenge. I'm still an engineer at heart. I'm still an introvert in totality. So for me to create newsletters and draft content all the time, like on a newsletter level. Like to me, LinkedIn's easy,
Right.
but on a
Right. Right.
newsletter, it's different. It's harder. It takes a lot more mental bandwidth for me to create that, and so I try to be more mindful of when I'm going to put one out. It's going to be higher content level or more information of, hey, I think something's coming, or hey, book release. I haven't done that
Okay.
yet. So by the you're probably the second person I've told that I'm doing a book. And I
Okay, cool.
hope to release here in a couple weeks. It's all written. I'm
Oh,
actually
wow.
waiting for the cover to be finished.
Oh, cool. Okay.
Yeah.
Gotcha. That's awesome. Super cool. Well, if there's anything we can do to help out with that, love to help support you. So
Yeah. Well, thanks.
awesome. Um, what as far as the different, you've done multifamily, you've done some other kind of asset classes and BTR and all that. What's kind of your box for
Mm.
for your investors and all that? Is any certain things you're kind of looking for, or just, yeah, would love to get some more insight
Yeah.
to that.
I like to say I'm agnostic on the buy
Hmm.
box level.
Okay.
Obviously, they have to meet criteria and quality, but
Sure. Yeah.
every asset class comes with a new learning curve. But what I tell my
Hmm.
investors is, um, ideally, and this is what I learned. This is serendipitous. I fell into this. Uh, if I could bring my investors to the experts in a niche, no matter where it is, they're investing
Hmm.
in with the experts in that given niche. But if I was
Right.
the guy running, you know, 50 unit value add apartments in South Denver, and that's all, and they only knew me, they're only investing in 50 unit Class B
Right.
value add assets in South Denver. So here, I can move about the country, I can move about operators, I can move about asset classes as long as they meet a certain threshold of quality from the operator. Like I was doing build to rent, no cash flow.
Uh-huh.
So that was really,
Right.
I'm just seeking quick multiples.
Yeah.
Now
Yeah.
I'm like, I'm done with non cash flowing stuff. I have to provide cash flow. So now I'm actually looking
Right.
at debt funds along with, the health wealth fund. We're going to go round two on that here this summer, but I'm considering a debt fund, which is, once again, a cash flow.
Right. Yeah. Awesome. Cool. On, I guess, a little more, on the personal side and all that. Any podcasts, books, any of those
Yeah.
that you've really enjoyed that have helped you out quite a bit?
Yeah. Um, I know most people say, like Robert Kiyosaki. I'm going to go totally
Yeah.
off script on this one.
Oh, okay, cool. Well,
So,
perfect. Yeah.
lately, I've been really dug in on a podcast called The Diary of CEO by Steve Bartlett.
I've never
He's
heard of
he's
that.
actually one of
Okay.
the
Huh.
biggest podcasts out there at this point.
Okay.
He interviews CEOs, people doing amazing things, lots of doctors doing incredible studies,
Right.
and it's
That's
just and
cool.
they're they're heavy though. They're like 2 hour long podcasts.
Oh,
So
wow. Yeah.
I walk my dog every day. I walk him a mile at lunch, and I digest and I learn a lot of things beyond just real estate, and it's been nice. I used to do a ton of audiobooks, and I kind of got bored of that, and now I'm doing this podcast.
Yeah, that's cool. That's awesome. I can't, I had a very similar, man, I can't remember the name of the podcast that, anyways, I used to listen to, not exact, maybe it's kind of similar, like, How I Built This.
Hmm.
Did you ever listen to that?
I've heard of it. I have not listened to
Okay.
it.
There's another kind of podcast. I can't remember. I'm kind of looking through real quick. Anyways, that was kind of similar to what you're talking about. It was there's a bunch of guys that, they're very well off because they were just kind of joking about, oh yeah, I just went to lunch with Trump or something like that. So but anyways, I'll yeah, try to look through here. Is any yeah, and I guess just I don't know if you already have a website set up for your book or not, but what's the best way for people to, get in touch with you, to learn more, about you,
Yeah.
potentially invest with you? What's the best way to connect with you?
Yeah. Yeah. So my company is Vestas Capital, and a lot of people just forget that easily. It's vestascapital.com. If you just go to investwithflint.com, it'll take you right to my website. And then
Okay.
I'm gonna have links obviously to my book there, but that's not all
Yeah.
mature enough yet. I'm working on that in the back end.
Okay. Awesome. And then, and then I guess, look you up on LinkedIn as well and
Yep.
connect with you there.
Yep.
Cool. Yeah, I couldn't find that. Anyways, I'll try to find it and I'll send it to you, but it's kind of along the lines of what you're talking about. But well, great. Yeah, appreciate your time here today and look forward to connecting here very soon and yeah, appreciate your time. Talk soon.
Yeah. Appreciate it.
All
Thanks.
right, thanks, Flint. See ya.
Yep. Bye.
All right.